Picture this. You've done everything right. You've skipped the daily lattes, packed your lunches, and consistently put money aside, month after month, year after year, watching that savings account grow to an impressive $100,000. But now you're faced with a dilemma that keeps you up at night. That $100,000 sitting in your bank account? It's actually losing value every single day. While it feels safe, inflation is silently eating away at your hard-earned money. At today's inflation rates, your purchasing power is diminishing faster than any interest your bank is paying you. Yet the alternative seems just as troubling. Jumping into individual stocks feels like navigating a minefield blindfolded. Pick the wrong company, and years of disciplined saving could vanish in months. With market volatility, economic uncertainty, and endless conflicting advice, it's no wonder you're hesitant to make a move. What if there was a smarter approach? A way to grow your wealth without becoming a market timing expert or spending hours analyzing financial statements? Today, I'm going to reveal a strategy that has quietly been building wealth for decades. A carefully selected portfolio of iShares ETFs that can transform your financial future. I've analyzed hundreds of ETFs to identify the 5 most powerful options available right now, each one serving a specific purpose in your wealth-building journey. I'll show you exactly how each of these ETFs can multiply your $100,000 investment. And I'm not talking about vague promises or theoretical returns. I'll break down the specific growth trajectories based on historical performance, showing you how your portfolio could grow to over $2 million, with one ETF generating more than $20,000 in monthly dividend income, and my top pick potentially turning your $100,000 into an astonishing $13 million over time. This isn't about get-rich-quick schemes or risky bets. This is about strategic, diversified investing with some of the market's most powerful tools. So whether you're wondering what to do with your savings, planning for retirement, or just wanting to make smarter investment choices, the next few minutes could change your financial trajectory forever. Let's dive in and discover how these 5 remarkable ETFs could transform your financial future. Hit like and subscribe now to discover the investment secrets most financial advisors won't tell you. Number 5. iShares Core S&P 500 ETF ticker symbol, IVV. If I could only recommend one single investment to build lasting wealth, this would be it. The iShares Core S&P 500 ETF, ticker symbol IVV, is quite simply the financial equivalent of owning a slice of America's economic engine. What makes IVV so powerful isn't flashy returns or trending headlines. It's the undeniable consistency that comes from owning the 500 largest, most established companies in the United States all at once. We're talking about household names that impact your daily life. Apple designing the phone in your pocket, Microsoft powering the computer on your desk, Amazon delivering packages to your doorstep, and Johnson & Johnson making products in your medicine cabinet. But here's what truly sets IVV apart. It's not gambling on which company will be the next big winner. It's owning all the winners, automatically adjusting as the market evolves. When new innovators rise to the top, IVV includes them. When outdated businesses fall behind, they naturally get smaller allocations or exit the index. Let's talk numbers. And they're impressive. Over the past decade, IVV has delivered returns of over 157%, which translates to a steady 9.87% annual growth rate. It accomplishes this remarkable performance while charging you almost nothing, just 0.03% in annual fees. That means for every $10,000 invested, you're paying just $3 per year in expenses. Nearly every penny stays working for you. But what happens when markets get rocky? That's when IVV truly proves its worth. During market turbulence, this diversification becomes your financial shield. Tech stocks struggling? Healthcare might be thriving. Energy prices volatile? Consumer staples remain strong. This natural balance is built into the DNA of the fund. Now, let's see what this reliable performer can do for your $100,000 investment over time. After just 1 year, your investment grows to $111,300. After 10 years, that same initial investment would multiply to $287,181 without you adding another penny. By year 20, as compounding works its magic, your portfolio swells to $801,131. And after 30 years, your original $100,000 transforms into an impressive $2,187,030. Let's break that down further. Of that $2.18 million, about $1.93 million comes from pure price appreciation of the holdings. The remaining $153,131 comes from reinvested dividends that silently boost your returns year after year. While IVV's current dividend yield of 1.43% might seem modest, these dividends have been growing at a healthy 6.95% annual rate. In year 1, you'd receive about $1,430 in dividends, or $119 monthly. By year 30, those annual dividend payments would grow to $11,986, nearly $1,000 flowing into your account every single month from this one investment alone. This is why IVV forms the cornerstone of our strategy. It delivers exactly what long-term wealth building requires: reliability, diversification, low costs, and the proven power of America's most successful companies working tirelessly for your financial future. Number 4. iShares, MSCI Global Gold Miners ETF, ticker symbol RING. In a world of increasing uncertainty, our next selection is what I call your financial insurance policy. The iShares MSCI Global Gold Miners ETF, ticker symbol RING. While most investments falter during economic chaos, this unique ETF is designed to thrive when markets panic. Think of RING as your portfolio's protection against the unexpected. Inflation surges, currency devaluation, geopolitical crises, and those black swan events that seem to appear out of nowhere with increasing frequency. What makes RING different is its focus. Rather than investing in physical gold bullion, this ETF holds shares in the companies that extract gold from the earth, the miners. This strategic approach creates a powerful amplification effect. When gold prices rise even modestly, the profits of mining companies can increase dramatically since their costs remain relatively fixed while their product becomes more valuable. We've seen this dynamic play out recently. While many standard investments struggled under the weight of trade tensions, RING surged over 45% year to date, precisely when traditional investments were taking a 10 to 20% hit. This counter-cyclical performance is exactly why having exposure to gold miners provides essential balance to your portfolio. Looking at RING's track record, it has delivered returns of over 55% in the past 5 years and an impressive 166% over the past decade, averaging around 9.98% annually. That's comparable to our foundation ETF, but with a crucial difference. RING often moves in the opposite direction of the broader market during times of stress. The expense ratio is higher at 0.39%, but this premium is typical for specialized sector funds that require more active management. What's particularly interesting is RING's dividend profile. It currently yields about 1.03%, but those dividends have been growing at a remarkable 12.30% annual rate, significantly outpacing inflation. Now let's examine what happens when you commit $100,000 to this financial fortress. After the first year, your investment grows to $111,010. By year 10, your portfolio value reaches $287,141. At the 20-year mark, your initial investment expands to $846,653. And after 30 years of letting this chaos hedge work for you, your original $100,000 grows to a substantial $2,580,800. Breaking this down, approximately $2,118,492 comes from capital appreciation of the mining companies themselves. The remaining $362,308 is generated from reinvested dividends that compound over time. What's particularly noteworthy is the dividend progression. In year 1, you'd receive about $1,030 in dividends, $86 monthly. By year 30, those annual dividend payments would surge to $46,163, providing you with a monthly income of $3,847 from this single investment. In a world where central banks continue printing money, governments accumulate massive debt, and geopolitical tensions simmer, having Ring in your portfolio isn't just prudent, it's essential. This ETF serves as your financial circuit breaker, potentially turning market chaos into opportunity while other investors panic. Remember, the goal isn't to predict when the next crisis will hit. It's to be prepared when it inevitably does. Ring provides that preparation, allowing you to approach uncertain markets with confidence rather than fear. Number 3. iShares Core Dividend Growth ETF, ticker symbol DGRO. Now let's turn to the true wealth-building secret that financial institutions rarely discuss, the iShares Core Dividend Growth ETF, ticker symbol DGRO. This isn't just another dividend ETF. It's a sophisticated income-generating machine designed with a singular focus. Companies that consistently increase their payments to shareholders year after year. What makes DGRO special is its ruthlessly selective approach. To earn a spot in this exclusive portfolio, companies must pass 3 critical tests. First, they must demonstrate at least 5 consecutive years of uninterrupted dividend growth, proving they're committed to rewarding shareholders through good times and bad. Second, they must pay qualified dividends that receive favorable tax treatment, maximizing what actually reaches your pocket. And third, they must maintain an earnings payout ratio below 75%, ensuring they're not overextending themselves just to make payments they can't sustain. DGRO even goes a step further by excluding the highest-yielding 10% of companies, cleverly avoiding dividend traps, where unsustainably high yields often precede dividend cuts or company troubles. The result? A collection of financial powerhouses with rock-solid balance sheets and management teams dedicated to sharing growing profits with their owners. Currently, DGRO offers a starting dividend yield of 2.35%, already higher than our previous selections. But the real magic lies in its dividend growth rate of 12.53% annually. This means those dividend payments aren't just steady, they're accelerating, outpacing inflation by a substantial margin, and creating a potent compounding effect. Performance-wise, DGRO has delivered over 65% total return in the past 5 years, while maintaining an exceptionally low expense ratio of just 0.08%. This means you're keeping more of what you earn compared to actively managed dividend funds that often charge 5 to 10 times more. Now, let's explore what happens when you commit $100,000 to this income powerhouse. In your first year, your investment grows to $110,630, while generating $2,350 in dividends, about $196 monthly. By year 10, your portfolio value reaches $287,384, and annual dividends have grown to $8,794, providing $733 every month without touching your principal. The 20-year mark is where the dividend growth strategy really begins to shine. Your investment swells to $942,114, but more impressively, your annual dividend income reaches $43,029, delivering $3,586 monthly. And after 30 years, your initial $100,000 transforms into an extraordinary $3,758,430, with annual dividend payments reaching an astonishing $254,278. That's $21,190 flowing into your account every single month. Let's break down where this wealth comes from. Approximately $2,101,908 is from capital appreciation as these dividend-growing companies increase in value. But the remaining $1,556,522, over 41% of your total gains, comes purely from reinvested dividends doing the heavy lifting over time. This perfectly illustrates what legendary investor John Bogle meant when he said, "The miracle of compounding returns is overwhelmed by the tyranny of compounding costs." With DGRO's minimal fees and maximum dividend reinvestment, you're experiencing the full power of this financial miracle. While DGRO might not make headlines like flashy tech stocks, it quietly delivers something far more valuable: consistent, growing income that eventually reaches life-changing levels. This is how generational wealth is truly built. Not through speculation, but through owning businesses that pay you more every single year, regardless of market conditions. For anyone seeking financial independence, a comfortable retirement, or simply peace of mind through market volatility, DGRO deserves a central place in your investment strategy. Number 2. iShares Global Tech ETF, ticker symbol IXN. Now we shift from steady income to explosive growth with our second most powerful ETF, the iShares Global Tech ETF, ticker symbol IXN. This isn't just another technology fund. It's your passport to owning the companies that are fundamentally reshaping our world. While many investors focus solely on U.S. tech giants, IXN takes a truly global approach, connecting you to groundbreaking innovation wherever it emerges. This ETF grants you ownership in the most transformative companies on the planet, from artificial intelligence pioneers to cloud computing infrastructures, cybersecurity defenders to digital payment revolutionaries. What makes IXN particularly compelling is its perfect positioning at the intersection of two undeniable trends: the relentless digitization of every industry and the increasingly global nature of technological innovation. These aren't just companies selling products. They're building the essential infrastructure of modern life. When you invest in IXN, you're placing your capital directly into the growth engines of the global economy. Companies like Apple, Microsoft, and Nvidia, alongside international tech powerhouses that most U.S.-focused investors completely miss. These businesses enjoy powerful competitive advantages through network effects, high switching costs, and intellectual property that create formidable barriers to competition. The performance numbers speak volumes about this strategy's effectiveness. Over the past decade, IXN has delivered an exceptional 353.46% return, translating to a 16.24% average annual growth rate. That's nearly double the growth of our foundation ETF, demonstrating the tremendous wealth-building potential of concentrated exposure to technological innovation. While IXN does carry a slightly higher expense ratio of 0.41%, the premium is well justified by its extraordinary performance and global scope. The dividend yield is modest at 0.49%, but with an annual dividend growth rate of 7.17%, it's clear these companies are increasingly sharing their success with shareholders as they mature. So what happens when you commit $100,000 to this innovation engine? After just 1 year, your investment grows to $116,730, already showing the accelerated growth potential. By year 10, that same initial investment multiplies to $463,363, outpacing all our previous selections. At the 20-year mark, the power of compounding truly emerges as your portfolio skyrockets to $2,109,894, crossing the $2 million threshold. But the most breathtaking transformation happens at year 30, where your original $100,000 explodes into an astonishing $9,542,575, nearly $9.5 million from a single one-time investment. Let's analyze where this wealth comes from. Approximately $9,404,518 is generated through pure capital appreciation, as these innovative companies expand their global reach and capabilities. The remaining $38,057 comes from reinvested dividends, a smaller but still meaningful contribution to the total return. What's particularly interesting about IXN is how it balances risk and reward. While it does experience more volatility than broader market funds, especially during interest rate fluctuations or trade tensions, its companies possess the adaptability and innovation necessary to overcome short-term obstacles. When headlines create market anxiety, these businesses continue developing the technologies that will drive tomorrow's economy. Some investors worry about technology becoming overvalued, but this misses a crucial point. What appears expensive today may prove remarkably cheap when viewed through the lens of history. The transformative companies in IXN aren't just participating in the global economy. They're fundamentally reshaping it, creating entirely new industries while disrupting established ones. For investors seeking substantial growth without venturing into speculative territory, IXN provides the perfect balance. Companies with proven business models, yet still in their expansionary phases, capturing increasing portions of the global economy while generating the cash flow necessary for continued innovation. This is why IXN deserves a prominent place in growth-oriented portfolios. It connects your financial future directly to the most powerful economic transformation of our lifetimes. Number 1. iShares Semiconductor ETF, ticker symbol SOXX. And finally, we arrive at our ultimate wealth-building powerhouse, the iShares Semiconductor ETF, ticker symbol SOXX. This isn't just another technology fund, it's the single most transformative investment opportunity of our generation. Let me be clear, semiconductors aren't just another industry. They are the essential building blocks of every technological advancement shaping our future. Without semiconductor chips, there is no artificial intelligence, no electric vehicles, no smartphones, no cloud computing, no robotics, no modern medicine, no space exploration. Every single digital experience in your life depends on these microscopic marvels. SOXX provides concentrated exposure to the companies designing and manufacturing these critical components, the true architects of our digital world. I'm talking about visionaries like NVIDIA, revolutionizing AI processing, Broadcom powering telecommunications infrastructure, Qualcomm enabling mobile connectivity, and dozens of other specialized innovators creating the foundation for all other technology. What makes SOXX particularly powerful is its position at the convergence of multiple unstoppable trends. As our world becomes increasingly digital, the demand for more advanced chips grows exponentially. Every new AI application, every autonomous vehicle, every smart device, every data center expansion, they all require more advanced semiconductors in greater quantities. The performance numbers behind SOXX are nothing short of extraordinary. Over the past decade, it has delivered a staggering 456.18% return, translating to an average annual growth rate of 17.48%, the highest among all 5 ETFs we've examined. This isn't just incremental growth, it's wealth transformation on a multi-generational scale. While SOXX does come with elevated volatility compared to broader market funds, its long-term trajectory demonstrates the resilience of its underlying thesis. Yes, the semiconductor industry experiences cycles as supply and demand fluctuate, but each cycle has ultimately resolved at higher highs as the digital transformation of our economy accelerates. The fund maintains a reasonable 0.39% expense ratio while offering a dividend yield of 0.85% that grows at an impressive 11.45% annual rate. But make no mistake, this is primarily a growth vehicle, not an income generator. So what happens when you commit $100,000 to this wealth multiplier? After just 1 year, your investment grows to $118,330. By year 10, that initial investment surges to $529,301, already more than quintupling your starting capital. At the 20-year mark, your portfolio balloons to an incredible $2,730,730, nearly $3 million. But the true power of SOXX emerges over a 30-year horizon, where your original $100,000 explodes into a life-changing $13,895,328. That's almost $14 million from a single one-time investment, transforming modest savings into dynastic wealth. Breaking down this remarkable growth, approximately $13,631,443 comes from capital appreciation as these semiconductor innovators capture increasing value in the global economy. The remaining $163,885 is generated through reinvested dividends compounding over time. What's particularly noteworthy about SOXX is its concentration on true innovation leaders. While the fund holds about 35 companies, over 60% of its assets are focused in the top 10 holdings, the absolute cream of the semiconductor industry. This concentration amplifies both its growth potential and its volatility, making it ideal for investors with longer time horizons who can ride out short-term fluctuations. Yes, there are challenges. The semiconductor industry faces geopolitical pressures, supply chain complexities, and intense competition. Recent trade tensions between the US and China have created headwinds, but these short-term obstacles pale in comparison to the long-term necessity of semiconductor advancement for virtually every aspect of modern progress. Think about it this way. While many industries come and go with changing consumer preferences, semiconductors represent the fundamental infrastructure of the digital age, as essential to our future as electricity or transportation. By investing in SOXX, you're not betting on fleeting trends, but on the continued digitization of human experience itself. I've shown you how this carefully selected portfolio can transform $100,000 into millions over time. The roadmap is clear, the vehicles are identified, and the destination is financial freedom. The difference between financial struggle and abundance often comes down to a few pivotal decisions, and this could be one of them. Before you go, like and subscribe to this channel for weekly wealth-building strategies. Remember, the most powerful wealth-building strategies aren't complicated. They're consistent. Your financial transformation begins with the action you take today. This video is for educational and informational purposes only. Investment performance shown is based on historical data and projections. Past performance doesn't guarantee future results. Always conduct your own research and consult with a qualified financial advisor before making any investment decisions. Thanks for watching.